This is Jay Martin.
How are we doing, gentlemen?
Life is good, sir.
Life is good. Paul, it's good to see you. I just realized when we were setting up, I was like, I haven't seen Paul since the conference began. I'm not sure if you made it from Colombia. So,
been running around speaking to a lot of juniors and doing a lot of research on the copper juniors, particularly.
Well, let's lead in with that then. I'd love to pull on that thread. What have you seen that you liked? What have you learned?
Well, I think a couple of things. Chile, despite the political situation, seems to still be a very attractive jurisdiction for copper exploration. Given that the life cycle of a copper exploration project, you're looking at 10 or 15 years. There's a lot of new copper juniors forming, and whatever the political disruptions are today is going to be short-lived compared to the time it takes to explore a copper project. So they're able to think more longer term. You know, the presidency of Gabriel Boric, that's going to be 4 or 5 years. It's going to be over before they get to the sort of permitting stage. And of course, there's a lot of need for new copper projects. So they've been able to finance a lot of the big companies in Chile that own a lot of land or control a lot of land are facing pressure to use it or lose it. And so they're starting to do deals with juniors to enable the land to be explored. Freeport-McMoRan's been doing that. Codelco recently announced it's seeking exploration partners for projects the length and breadth of the country. Right. So Chile's still looking, well, it's going to continue to be a hotbed for copper exploration.
Following that thread on companies like Freeport, with depressed equities prices right now, is this a prime setup for some M&A activity over the next year or two?
On paper, you'd say yes. The copper price has been over $4 a pound for the last 2 years, over $4.50 a pound for much of the last year. The copper producers are making money hand over fist. They've been repairing their balance sheets, strengthening the balance sheets. The copper producers are paying very, very good dividends. Everybody knows there's a big deficit coming. Everybody knows there hasn't been major or significant discoveries in the last 5-10 years. The setup is sort of perfect, but nobody's transacting.
So let's, maybe I'll pass this to you, Ivan. I want to talk about that deficit. So can you expand on the demand and the necessary supply that we're missing?
Sure. It's long-term, really strong demand that's coming. In the short term, there's a lot of copper supply, but once you turn 2025 onward, that's where we really hit the crunch. We're an exploration group. We spent almost $200 million in the last 7 years looking for some of the largest copper gold mines in the world. And we chose Chile, of all places, as one of them. And these projects are not easy to find, the ones that could move the needle for supply. We have a project that has a 920-meter intercept of 0.5% copper, no other holes around it. It's all by itself, has a chance to become one of the bigger ones in Chile. But, we drilled a new discovery the other day that we drilled 100 meters or 90 meters of 0.94 copper, 0.84 gold, and the stock went down. So back to his comments, which are really good. I love that he's a bull on Chile and bull on copper, but the market's not there yet because it's a long-term, huge demand. The time it'll take from a discovery hole to production, 10 to 20 years, I'd say you have an ESG social challenge now that is a lot more sensitive than before. But the problem is real. We are running out of copper, the electrification, the electric vehicles, that's all going to hit in a few years from now. So being at this stage and having a discovery and a potential second major discovery on base is really a really unique situation to be in globally right now in Chile.
And Paul, you wanted to add something there?
Yeah, the main copper advisory firms, they're saying there hasn't been a supply response, and that supply response is getting more and more difficult to happen. It doesn't matter whether you're in Canada or Minnesota or Alaska or Chile or Peru. Everybody agrees that, yeah, we need more copper for energy transition. Nobody wants to live next to a mine.
No doubt.
Getting that social license to build a mine, that's going to become more and more difficult. Yeah. So the potential is for that supply deficit to increase. Yeah,
the not in my backyard mentality. Rick, you were nodding along with the supply response. Maybe in agreement, maybe not, but what do you have to say there?
I'm in complete agreement. I think that investors and speculators in the copper space need to ask themselves one question. Will there be a synchronized depression or recession in the world economy in the next 5 years? If the answer to that is no, there's going to be widespread and acute copper shortages. On the supply side, I've been involved in copper exploration and investment for 45 years. The mines worldwide that we're living on, with maybe 2 exceptions, Christ, they're my age. I mean, they're like past their prime. Chuquicamata's 110, Bingham Canyon's 150. I mean, they're as old as I am. And the truth is that you don't put fertilizer and water in a copper mine and have it grow more copper. Every day you mine the copper, your business gets smaller. We have underinvested systematically in the copper business for 3 decades. And that's coming home to roost. And when you listen to the permitting challenges that Paul talks about, the industry's known about resolution now for 20 years. They've been trying to permit it for 15 years. They're probably 10 years away from a permit if they get one. And this is 1 billion tons of 1.5% copper. I don't know the way out. From my point of view as an investor and speculator, this is a wonderful set of circumstances. From the world's point of view, from the point of view of 1.2 billion people on Earth that don't have access to electricity, this is a bad thing.
Right. Now, I think you mentioned on our first conversation at the show, you had 79 companies in the portfolio, thereabouts. Can you break that down in terms of percentage that are in the copper business, Rick?
You're asking an old man to tax his memory. That's cruel and unusual punishment. I would suspect, in terms of the speculative class of companies, I'm not talking about the big ones.
Please, thanks.
In the speculative class of companies, I probably have 5 or 6 copper companies.
Okay.
In my portfolio.
Okay. And what are the first steps you do when you've made those decisions? Is it the people that you're following, the jurisdiction? What are you looking for?
In the copper space, because the copper space got so cheap 3 years ago, what I was looking for in a copper company was copper.
Sure.
I wanted a big reserve, a big resource, and I wanted a big reserve and resource that I thought would A, be economic, and B, be permittable. I had the extraordinary good fortune some years ago of having the guts to buy lots and lots and lots and lots and lots and lots and lots of Ivanhoe.
Yeah.
That was a project with, 6% primary grade in a world where most deposits have 0.5%. It had the misfortune of being in the Congo, but from a permitting point of view, that turned out to be a very good thing. In terms of permitting, the worst countries in the world are probably the best in the sense that they need copper. They need mining. Other countries believe that they're wealthy enough not to have mining, but basket cases like Congo mercifully don't believe that.
Right. And does that typically trump political transition when a country has been so reliant on the commodity space, and then there's a shift in politics, and we see somebody we think is more likely to lean on nationalization, but historically the country has always relied on mining? From your perspective, does one trump the other? Do you look at the present-day politician or the long-term history of the country?
I don't do well in that sort of thing. I've been victimized politically in good countries and bad countries. Right now, the top country in the world in terms of my hit parade for political risk is Canada, having been exposed to the property taxes, the confiscatory property taxes for non-residents in British Columbia. I think British Columbia and California are both worse jurisdictions than Congo, personally. I am of the broad opinion that countries that can't get any worse get better, and countries that can't get any better get worse. The idea that in the United States, allegedly a free market capitalist country, that you can't permit one of the best copper mines in the world that's in the shadow of another copper mine strikes me as being insane, but it's fact.
Yeah, maybe an opportunity for the next party. We'll see, I suppose. Okay, so I want to pass it back to Ivan and or Paul. Investors who are walking around the floor today looking at a whole variety of companies, right? Let's help them out. Help me out, right? What are you looking for when you begin doing diligence on some of these highly speculative copper companies?
Following up on Rick's comments, I would say, the jurisdiction aspect, not just at the national level, but the local, regional level, because you can be in certain parts of Arizona and do well. You can be in other parts of Arizona and not do well. And imagine sort of British Columbia is like that. Alaska is like that, certainly. So having a good look at the sort of local jurisdiction, the government relations there, the community relations. Grade and tonnage, obviously one's on the list. The big copper companies, Copper is very different to gold. It is technically possible or feasible for a junior gold explorer to become a producer. That's much less the case in the copper space for various different reasons. But the majority of copper juniors are looking to be bought out by a bigger company. Bigger companies typically want big projects, and they tend to come with big ticket prices. But I think what we're seeing is, given that developing a greenfield project is going to become more and more difficult, the trend is for the development of brownfield projects. And so companies, juniors that have already got infrastructure... Can you
define the difference of greenfield versus brownfield?
Okay, greenfield would be a project that wasn't known, but it was discovered and advanced to a deposit. It probably doesn't have any infrastructure around it, so all of that would have to be built, and that could include roads, power, processing plant, the whole 9 yards. A brownfield project is probably one where there's been mining in the past, or very close to somewhere where there's been mining in the past, so there is likely to be roads, power, water, a workforce, processing plant, things of that nature. And so brownfield projects generally have less risk because some of the infrastructure or a lot of the infrastructure already exists. There's perhaps already been mining. There could also be some permits already in place. So it's a much less risky proposition. It's probably a much lower capex proposition as well. And so I think that's going to be the trend. And so a lot of the big miners have big deposits as old as VRIC, and they're looking to extend the life of those projects. So how that's going to happen, the cut-off grade's got to come down. Cut-off grade's going to come down perhaps through technological advance. That will make some impact, but mainly the thing that will bring the cut-off grade down is the copper price going up. We're over $4 a pound today, which is historically a very high level for the copper price, and I think in the future we'll look back and say that $4 was a cheap copper price.
Okay, Ivan, what do you want to add on to that?
Yeah, just from an exploration group, you know, it's just as hard to find a small mine as it is to find a big mine. And so we look for the biggest ones we can find. So complementing the jurisdiction comments, I agree with both. We chose Chile and Peru is our playground because some of the biggest, or the biggest copper mines in the world exist there. It's hard to go find a major mine where no major mines have been found before. Grade is king. It always will be. It solves all problems. And most of our geologists come from the major mining companies, BHP, Newmont, and whatnot, and 0.5% copper is a very important number to them, as they've told us, and it's important to us as well. When you look at low-grade copper deposits, you got to think a lot of money to build a mine. Multi-billion-dollar capex is low-grade. You're playing a fine line, and I agree with the copper. I think the price is going to look cheap, as you said, per pound, but at the same time, you know, I'm a discovery-oriented investor, and I'm a discovery-oriented entrepreneur, because that's the best curve for investors to realize the value. I do go on the deeper side of risk. We like that as a group. We like to go way into greenfields because there's way more reward if you get it right. Copper's a lot easier than gold because it's homogeneous. If you walk on a kilometer of copper, generally you can drill underneath the coppers there, where gold can move a lot. So if you get the right address, you're set. Now to go find that, we got into a project, the one with the 900-meter intercept. It was an owner that found Pascua de Lama, El Indio, all the big ones in Chile. He did not deal this project for 30 years, and there was a few holes in it prior, and we earned that respect. It took us a year and a half to get the project deal done with him. So when you think about copper today, and you think about the timeline Rick talked about, 10 to 15 years, it takes a long time to get to the point where you can start drilling. That's expensive. Time is very expensive, and so is the money to do that. But being there at the forefront, having grade on your side and scale, that's the dream scenario, and it costs a lot of time. It took us 11 years with this company to find this project as a whole, so we have a chance to make a difference, but I'll probably be long retired by the time this mine, if it's found, gets put in production. I might be as old as Rick.
I love that. Now, Paul, I want to follow up with you on your final comment. You said we're going to look back at $4 copper in the future and say that was really, really cheap. Can you apply a time horizon for us? And I know that's speculation, but what's your time horizon? And define really, really cheap as well.
I think a lot of the copper analysts viewing it by 2030, there'll be depending on the analyst, a 6 to 10 million tons per year copper deficit. And that's in a market that today is around sort of 20, 22 million tons a year. So that's a substantial deficit opening up. So this could be within a sort of couple of years, it's potentially going to really take off.
And what could stand in the way of that? What's the event between this and that outcome that could change things?
global meltdown and world recession.
Got it. All right. Rick, anything to add to that?
No, I think that sums it up perfectly. Absent decrease in demand, we're going to have decreases in supply. There ain't no way around that. If we have a decrease in demand in some reason, then there doesn't have to be a price response. Otherwise, there's going to be a price response.
And that, I guess, draws back to your earlier comment about unless there's a unified, right, global recession everywhere, because as long as somewhere is growing, right, we're moving towards a deficit regardless, right? Is that correct? Did I understand that correctly?
Absolutely. Absolutely. You know, one of the things that I think needs to be talked about more is this whole sense that ESG is the enemy of the copper business. If you turn around the ESG to the S part, 1.2 billion people on Earth have no access to electricity. Another 2 billion people on Earth have access to only intermittent or unaffordable electricity. The bottom half of humankind, from a material standpoint, want to live the way that you and I do. And what right do we have to deny them? They want electrification. They want the calorie counts per capita in their families to go above 1,600 calories. They want access to the same lifestyle that we do. And the access to that lifestyle is going to be more important to the copper business than the electric vehicle is, for good reasons.
That's good perspective. You looked like you wanted to bolt something on there, Ivan.
No. Just to compliment, I mean, electrification is well misunderstood.
Okay.
I think everyone takes it for granted, and I don't think people realize at the pace that it's growing. By 2050, there's going to be 2.5 more billion people on the planet. And we are going at the steepest curve possible to solve it. The ESG comment is interesting because the solution is electric vehicles, but we don't have enough copper to supply the electric vehicles. There's a shortage there, right? On the copper price, when I first met Rick, copper was 59 cents a pound. And I was looking for high-grade copper deals in the multi% because that's what made money. But look how far we've come. Now you're looking at 0.3, 0.5, and you're excited, you know, and that's how much has changed. But the population change has grown considerably since 2000 till now, or 2001 till now. And I think we're on the steep side of the curve, and the demand just going to get out of control.
It's good perspective because some of the copper bears that I've had on stage at this show point directly to and only to electric car adoption, right? And they look at the demand created by the forecasted adoption of electric cars and say that forecast is unrealistic. We had a similar conversation on the silver panel where it was like, okay, look, we're forecasting silver demand based off the electric vehicle revolution, and I don't think that forecast is realistic, and you're saying it doesn't matter. It's an irrelevant data point. Right?
Precisely what I'm saying. The electrification of the world, the last mile for 3 billion people is more important than Tesla doubling or tripling their sales. Of course, in the Western world, we're going to use more and more electrical applications for more and more things. Western world demand isn't solely a function of Tesla.
Yeah.
But what's much more important is the material ascent of humankind. And that's a good reason to have a higher copper price.
So I want to go around the horn here right now and talk about capital allocation a little bit. I'll start with you, Rick, and then work towards me. Are you currently hunting? Are you allocating cash? Are you comfortable with your positions and you're sitting and waiting patiently? Talk to me about your action right now.
No, I'm actively trying to allocate cash. The issuers have a different point of view than me. I think capital markets are still expensive. And my friend Ivan thinks that things are pathologically cheap. Until the issuers out there in the exhibit hall can spell warrant, my suspicion is that capital markets are expensive.
Right.
But I'm actively trying to allocate cash. This is an advertisement for those public companies who have a good story and can spell warrant to come look me up.
Yeah.
Just on that note,
Please.
I did not give a warrant for 18 of my 23 years, or maybe 19, until this year. And so I'm finally giving warrants, Rick, and you'll get a call when it's time.
Well, you know, now that you're missing hair, your spelling's improving. It's great.
Paul,
go ahead, Paul.
Yeah, Paul, talk to me about what you're doing in the market right now.
I'm sort of definitely looking. I fear or suspect that things are going to get even cheaper, so for the time being, sitting on my hands. But I'm looking very, very closely and looking at increasing positions on some things I already own and perhaps looking at opening positions on some other things. For me, I'm looking more at a very advanced stage or even producers. because I think one of my sort of most successful sort of investment points in time was as COVID broke that March, when everything plummeted. You had some of the big diversified copper miners, their stock prices fell in half, and that was the bonus or jamboree time, getting into some of those names at that kind of price level, and within a couple of months it pretty much bounced straight back. I mean, that was just giving away stuff.
And could I pull on that first statement you made? You said you're waiting and watching and sitting on your hands for now. What are you watching specifically, Paul? What are you looking to see?
I'm not sure. The past few weeks or months, the copper price has had depending on how you want to phrase it, a stutter, or it's had some sort of weakness. So I'm waiting to see how that resolves. It could carry on going down to sort of below $4, or it could. This could be $4.10, $4.20. This could be a sort of a bottom, and it might start going up again. So I'm waiting to see how that resolves.
Okay. And Ivan, and feel free to talk your book. I'm all about self-promotion, so.
Yeah, don't like to overdo that, not on stage with Rick, because it doesn't always go well to overdo it, but I'll touch on it lightly. I'm an explorationist, so I'm an eternal optimist, and I am extremely long. I couldn't be longer right now, and so is my whole group. I've got the biggest portfolio I've ever had in copper, because I believe in everything we're talking about up here. Torque Resources, I will talk the book, we sponsored this. That's the one with the drill holes I spoke of. And then I'm the CEO of a company called Copernico Metals, and we have an analog exploration project that is an analog to Las Bambas. That's the 9th largest producing copper mine in the world. That's an exploration analog that has potential. 10 of the largest mining companies in the world have called us, and 4 of them are calling us on Torque. So we've really taken a serious dive into copper as contrarians, which is how I met Rick, as being a contrarian, and I got long early. I'm not happy with current share prices because I feel better when they go up, but I'm a long-term guy and I'm patient, and I'm looking forward to the next 2 years. I don't think we're going to have to wait that long to see a reaction, because the market always trades on a future. It never trades on the day copper's at that price. So I don't know when the perfect day is to dive in and get that good feeling momentum, but I do know right now it's kind of that very opportunistic market in the juniors, struggling to raise money, no respect to discovery results, unless you really hit a big one that's really new, that's a game changer. So very opportunistic timing. I am a bull, and I think I'm right in the long term, but I don't know the perfect timing yet, and I look forward to when it happens.
All right, and Paul, you wanted to bolt something on there.
Yeah, one thing I'll add on to that, there's, I'm bullish on copper. I still think Chile's very positive. There's a number of pre-public, pre-IPO juniors out there sort of getting together. They're getting investment from the major companies. So as and when these things come to market, they could potentially be very good opportunities. So I guess my message there is keep eyes and ears open for as and when these companies mature and actually get to the listing stage. When I had my talk yesterday talking about copper, I said future VRICs, they're going to have a lot more junior copper companies coming into them.
You think so? You think so? Okay. Look, gentlemen, I want to thank you for joining me up here tonight. Let's give my panel a round of applause, please.
This is Jay Martin.